Welcome to the Building Wealth with No Borders podcast with me, Lamide Elizabeth, where I'll be inviting guests from around the world to share their strategies on building wealth. And today we are in Dubai with Adam Fayed, who is the most viewed financial writer on Quora and a wealth management expert for expats and high net worth individuals. So welcome, Adam.
Pleasure to be here.
Could you just introduce yourself more generally to the listeners?
Yeah, so I've been an expat myself now for 13 and a half years. I first came out in 2011 and I started my own business in 2018. And it's interesting because when I first started traveling independently, it was in 2007, which obviously is quite a long time ago now, quite scary, almost 20 years ago. And I went out to China and Thailand, and I was with my good friend who met a guy on Skype. You can see how long ago this is now. We're talking about Skype. And he was actually first out in China as an English teacher, but he quit his job and he had an online income doing things like, graphic design and so on. But at that time, even though it was only 18 years ago, that was very radical because you had these slow internet connections and so on. But I can remember thinking to myself, he's got a good life. He might not be earning loads and loads of money, but it's great that he can actually do this. He can actually work online. He can make an online income. So like when we went to Thailand together from China, he would sometimes work on his laptop when he felt like it. And then 2 years later, when I went back to Thailand and China, I met a British gentleman who he's in recruitment, or he was at that time. And he told me that actually he was going to live in Thailand on his British income and basically, get some arbitrage from that. And it was seen as radical at that time, but it put a seed in my mind that long term, that's always what I wanted to do. So when I went into wealth management, what I noticed is a lot of expats, by definition, they move around a lot, right? And then what happens is after the initial relationship is formed, let's say when I was living in China or Indonesia or Cambodia, that person would move to another country, right? So how did you communicate with them? You did it via email or whatever you did, right? Mm-hmm. But at the time, the feeling in the industry was business was best done face to face. But I saw so many people who basically like their businesses were destroyed because, for example, they were just focusing on one country. So I knew 2 or 3 people who were, for example, expat financial advisors to the Indonesian expat community. Then there were changes to the visa rules and the number of expats there plummeted. So they basically lost 80% of their, business quite quickly in some cases. So I thought to myself, well, why don't I actually set up a business where it's global within reason? Obviously, there's certain countries we can't accept for regulatory reasons, like, a sanctioned country like North Korea or something like that. But why not have a business which is available in almost every country in the world and it's portable? So if my clients leave, then it doesn't matter. If I leave and I move around, it doesn't matter. So I've lived and worked in 8 different countries in total. But for years now, since 2018, my business has been all about really being remote. So I don't meet clients before they become my clients. And it doesn't matter to them where I am or where they are. So that has given me a lot of arbitrage and leverage to expand the business. Now it's a very normal business method and way of doing things since COVID. But when I started in 2018, it was considered quite radical, at least in my area of business. And I think that's because high trust services like legal and financial services naturally are more conservative industries.
Yeah.
So whilst, for example, buying a book online on Amazon was normal in 2000, I think even as late as 2017, 18, 19, a lot of people didn't see that it could be done online. But I got in still relatively early. I wish I would have done it sooner. But yeah, I've been doing it online and remote since then. And so for me, when I move my residency or change my residency, it doesn't affect business whatsoever. So I got stuck during COVID. My residency was stuck for a few months. It didn't affect anything. So basically, that was the idea of my business, to diversify my revenue streams globally and to have clients globally, but also make things easier for the clients, because clients in general in any industry, they want fewer hassles. They don't want, a lot of hassles. They want to transact easily online in an efficient way. They don't want, 3 or 4 face-to-face meetings and 40 pages of application forms and God knows what else. So It's about making that friction better, like a more convenient model, both for me and my clients.
So when you were doing wealth management before you started your business, so you were still doing wealth management for expats at that time?
I was, yeah. The only difference was I was constrained by location. So when I was doing it in Shanghai, or I also did it in Southeast Asia, Cambodia, Indonesia, and beyond, I was typically only meeting people in that geographical location. Or maybe occasionally I would, trip into a nearby country and meet people, but I wasn't doing business on a remote basis. But yes, absolutely. Before setting up my own business in 2018, I was doing the same kind of business, expats and high net wealth individuals. Primarily, I was in the Asian market, but I have been around in the Middle East, in Europe for a year as well. And it's always been the same model, but the difference is, the same clients, but the model has actually changed.
Oh, that's amazing. That's cool. That's cool. I really love that. And you touched on something that I feel really passionate about as well, which is geographic arbitrage. And I think the reason for me why I feel so passionate about it was because, especially growing up in a really expensive city like London, when I thought about what I wanted my dream life to look like, I always felt like I was so far away from it because it was so expensive to afford in London. And then through, lifting the geographical constraints and actually looking at living in different places, I realized actually the house that I wanted or the lifestyle that I wanted, I could actually afford, or I am actually closer to it if I just changed context. And so could you kind of explain what geographic arbitrage is to the people who are listening?
Well, I'd say it has 2 or 3 different components. I mean, one component is if you have X and Y amount of money, you can just move to another country for either lower cost of living or lower taxes. So for example, if you are a pensioner and you've got a pension of 30,000 or 40,000, of course, that money is going to go further in another country in certain cases, obviously depending on the tax rules and many things. Likewise, if you're, say, a relatively wealthy person or a very wealthy person, there might be arbitrage not so much in the cost of living, but you might have arbitrage when it comes to taxes. Again, obviously the devil's in the detail, but let's say you're living in London and you can have an opportunity to go to Singapore or Dubai or Monaco or whatever. You might not see a big difference in the cost of living per se, but you're going to have the arbitrage over the tax if you organize your affairs, correctly. But I think beyond the financial side, I mean, some people have other reasons to go overseas and there's still an arbitrage there, right? So for example, even when it comes to networking, socializing, social life, some people might actually see an advantage of that. Especially if they're living in a small town or place in their home country. It might also get them new opportunities, fresh opportunities if they move to a place where there's more things going on as well.
I love that. Because you covered so many elements of why life beyond the borders that you currently see could be better for you. It's not always necessarily about saving money. Sometimes it's about the ability to make money from the contacts or the different things that are going on in different regions. And one of the things that I like to say as well is that different cities are known for being good at different things. So even in different stages of your life, you might find that in a certain stage, maybe you want to be in a certain city. And then once that kind of stage is over, you're in another stage and another city might serve you best. So yeah, that is a really good way to kind of sum up, what geographic arbitrage is about. So I think I might have seen this on something that you wrote or on your YouTube channel or something that 28,000 millionaires have left the UK in the last 5 years. So where are they going and why?
Well, the why is quite complicated, but I think basically when you come down to the key question is that a lot of people feel like the UK is in decline because a lot of people, they talk about the taxes and the taxes are important. But let's say if UK taxes were going up, but say the services were getting better and the economic growth was very high, then more people would stay. But I think there's a feeling that with a high kind of aging population now, with high taxes, high regulation, and so on, that basically you're paying more but getting less. And obviously COVID came during a time when we already had an aging population. So I think the bottom line is more people in this world where it's, as you say, like a portable world where people can move more easily. More people are saying, well, why should we have to pay more in taxes and cost of living when there are options out there that in many cases are safer, cheaper, or lower taxes, or all of the above? And that's the key thing. But I think beyond that, there is a feeling about the political environment because, I've just been back from the US, and in the US, for example, of course, there are people of different ideologies, but in general, they've got a pretty positive view about wealth creation and so on. You can see the same thing in Singapore in general, I think, in Dubai, even in somewhere like a Monaco or maybe even a Guernsey, Jersey, Isle of Man, you might see it to a certain extent. But I think in the UK and actually many European countries in general, increasingly since the financial crisis, it's seen as like a negative thing, almost as like a bash the rich kind of culture. And I think that also doesn't help people in terms of like what they're thinking. So I think a lot of people feel they could actually gain more from being abroad. And let's face it, if they don't like it, they can always, come back after a few years anyway and save money on taxes and so on. So, yeah.
Where are they going?
There's a mixture. So when I've looked at the stats, the UAE is a big one, but also places that also speak English as a first language, of course. So Australia, certain parts of the US, like Florida, is a big one. I think Portugal too, but that's partially because they have that program, the non-habitual residence program. So any European country that has like a special tax exemption has attracted a lot of British expats as well.
So is that why people are always going to Portugal? What is that you just mentioned?
Well, the interesting thing is the scheme keeps changing. So traditionally it was more liberal. So you could buy a property and you could live tax-free for 10 years in certain circumstances, depending on how your income is sourced. So let's say if you had passive income from stocks and shares, or you sold your business, you could basically live tax-free in the middle of Europe for 10 years. But they have made it stricter over time, and you can only qualify in certain circumstances now. But still, in the last 5 years, there's still been a lot of British people who have gone down that route. Fewer people now, but certainly in the last 5 years, a lot of British people have gone down that route. So I'd say those are the main ones. And then, of course, there's always British people who, because of a wife or husband or whatever, they have their options elsewhere. Singapore to a certain extent, but it is harder to get into Singapore than it was before. But all of these areas are seeing like influxes of British people coming in.
And is the same trend happening in like the UK? Like Canada and US, New Zealand? Are millionaires also leaving those places in floods, or not so much?
Yes and no. I would say Canada has seen an increase in wealthy people leaving. That is for sure. And there's various reasons for that. Again, it comes down partially to politics and the sense that taxes are going up and Canada's in decline and the health service is not good when I speak to Canadian clients. But I think the big difference with Australia and New Zealand is they are attracting in millionaires from China, because Chinese people who have already made their money, and I know this from living there, and we did overseas property and second residencies for Chinese people when I was living in China, as well as the expat wealth management side. For them, a lot of them, it's more like, I've made my money now. I'm in a one-party state. I want my kids to like learn English as like a native or joint native language. So they're more like, they're not going for tax reasons, often it's lifestyle. And it's still relatively closer to China than say the UK or US. So Australia and New Zealand less so, because they're also attracting in people. The US is an interesting one because the US has the citizenship by taxation. So when it comes to the US, every single year there's an increase in the number of Americans giving up their US passport. But I think partially though, that's because once people are out of the US, they realize it constrains them in certain cases to have the US passport. So there's been an increase in US expats who are giving up their passports. However, when it comes to people living already inside the US, and if they don't plan to live overseas, I think the difference is the US economy has done better than the UK or Canada in recent years. AI is booming. Also, taxes in the US have actually, the overall trend has gone down because you had the Trump tax cuts and now probably more tax cuts. So I would say in the US, it's probably less of a thing. But once they're already out of the US, definitely there's more people who are going in the same direction as the Facebook co-founder, Edward Swarin, the Brazilian guy who gave up his US passport. So we do have clients like that as well, people who are former Americans, especially imagine you're British or South African or whatever, you live in the US for 20 years, but you weren't born and raised there. A lot of those people are not going to be loyal to the US government, because why would you? Because you weren't even born in the country. And you might think to yourself, well, why should I keep paying taxes to the US government when I don't plan to live there again?
Yeah.
So there are a lot of former Americans out there, and there's a lot of people who give up their green cards as well, because people forget that it's called a US specified person. If you keep your green card, even if you're not a passport holder, that's like a residency permit, or you can live in the US if you have a green card. Even in that case, many people give up their green cards because unless they're going to go back to the US, it just causes problems sometimes for them. So we are seeing an increase in that, but that's a trend that's been going on, I would say, for about 12 years since the FATCA rules that were brought in by the Obama administration.
Yeah, so I think a lot of people don't know that. So if you're a US citizen, even if you move to a tax-free country, like an income tax-free country like Dubai, is it if you earn above 150,000, right?
There's an allowance. So I don't think it's as high as 150. It used to be 105, but I think now it's gone up to like 120, 130. Okay. But then if you have a partner or you're married, should I say, you get that times 2. So you can go up to like 200 and odd thousand. Okay. But I think the bigger thing though is you've also got certain hassles that go along with it. So you have got to file. That's number one. Yeah. So in the same way that if you're British and you live overseas and you buy properties in the UK, you've got to file taxes to the UK government in that circumstance, just on those properties. So you've got to file. But then I think a bigger thing is a lot of financial institutions don't want to take Americans overseas because of the compliance and the hassles. So for example, just go to an average European bank. One of the questions will be, are you a US taxpayer? Are you a US person? And in many cases, they just say, no, we're not going to accept because the hassles and so on that go with that. So I would say for a lot of Americans overseas who give up their passports, it isn't always necessarily needing to file on taxes. Sometimes it's the hassle that goes along with it because a lot of them will put assets in their wife or husband's name, even though, that has its own risks. So I think that's a big thing. But I think for people already living in America, it seems to be the case that they're much more optimistic than the average British person or Canadian person, especially right now. I was just in the US and people seem pretty optimistic about the future. So that's a very big difference to the UK.
That's true. That's true. I've spoken about that. Or other guests have mentioned that in terms of like the mindset of like UK people versus some US people. Okay, so what I kind of would like to do next, and this is kind of to just kind of aid certain people who are kind of like, okay, I kind of want to leave. I don't know where to go. So what I want to do is like go through all of the continents, okay, not all of them, but the ones that are more habitable, and then maybe just get your opinion on what the hotspots are in those continents and who it might be suited for. So the first place is Asia. Like, what are the hotspots in Asia?
I would say Southeast Asia, Bali is a big one because they've got digital nomad programs and so on and so forth. And they've got many programs actually. But Bali's only a hotspot, same with Thailand, if you've got an overseas income. It's not hotspot if like you just want a local job, right? So it's more like, if you've got income overseas, it's one option. Singapore is a hotspot as well, but that's more for high net wealth and ultra high net wealth individuals, not most digital nomads, but it's still a hotspot, I would say. Places like Cambodia, Vietnam, those kind of places are more off the beaten track, but they do get some people. I mean, Malaysia has the MM2H program and other programs, but I would say in Southeast Asia, basically Singapore, Thailand, and Bali are the main hotspots in that region. And obviously, as we discussed, maybe for some Chinese people, if they go further afield to the Pacific, then Australia and New Zealand as well.
What about the Middle East? Because that will also fall under Asia as well.
Well, for the Middle East, I would say the UAE's got quite I wouldn't go as far as a monopoly, but if you think about it, very few people, if any, go to, say, Saudi Arabia, for sun, sea, and partying, right? So it's not just Saudi. It's true that like Oman and Bahrain, people who are already in the Middle East know that these are great places to live. But very few people who are living in the UK or Germany or the United States say, you know what, I'm going to go to Oman. It's more likely they come to Dubai or Abu Dhabi or somewhere in the UAE first. Yeah. They travel around and then they think, Oman's quite cheap and it's also very safe. How about Oman? But I think for people coming into the region, I would imagine that the UAE, especially Dubai, has a close to monopoly on the number of people coming in. But having said that, you do get more adventurous people who go to, for example, Turkey's between Europe and the Middle East, but Turkey, Egypt, obviously that's North Africa. But people who are looking for a low cost of living and a decent lifestyle, they might also look at those places. But I'm guessing, I don't have the statistics at hand, but I'm guessing the UAE must get over 50% of the whole Middle Eastern market when it comes to at least new people coming in. I've noticed Oman and places like that, they do start to attract people, but typically they first move to somewhere like the UAE, or maybe they got a job in Qatar or Saudi, they've traveled around, they like Oman, but they didn't think about it when they were in their home country.
I hope you guys are enjoying this content. If you are, please don't forget to hit the like button and subscribe. If you're committed to building wealth with no borders and want to invest in a property in the UK or in Dubai, feel free to send an email to lamideelizabeth@gmail.com and I'll be sure to help you. If you're not quite ready to invest yet, check out the affordable video courses down below that will teach you more about property investing and money management. And if you're thinking of relocating to Dubai, setting up your business, breaking into certain industries, getting a visa, check out the Professional Network. The link will be below. Yeah, I'd say that I think that in my experience, the UAE is the easiest for me, from my perception, the easiest to assimilate into coming from somewhere like the UK. I think Americans might find it to be the same as well. So I get why it's a hotspot. I think there's a lot of accommodations that is being made as well to accommodate people from places like the UK and the US. But what do you think of people saying like places like Riyadh? I wouldn't really say Doha, but mainly Riyadh, I'm hearing stuff like it's going to overtake the UAE, or their plan is to like rival Dubai kind of thing. Do you think it will ever be able to match Dubai?
Well, you never know, because I heard a story, which is that, and again, this was just an anecdote, so I can't say if it's true, but one of the rulers of the UAE 20 or 30 years ago was in his car being driven around by the driver, and he saw some German tourists on the beach and he couldn't believe it. He thought, it's summer in the UAE. Why in the hell do people want to come in from Europe to come to our country? And he stopped off. He told his driver, stop here. And he spoke to the tourist and he got the idea. Why can't Dubai be a tourist place, right? Just because no one thought about that at the time. Now, I don't know if that was 100% true, what I heard, but what is true is I think 30 years ago, nobody believed Dubai could be what it is today. I mean, Dubai and I think Singapore and the UAE, you have to say these are two places where, not every decision has been made right, but the rulers of these countries in general have made really good decisions for their country. I think, though, when it comes to Saudi, if they're to become the next UAE, I personally still think it's an outside bet. And I'll tell you why, because when it comes to like normal business, that's different because Saudi already has a big economy. People forget if you're just talking about normal business. I think the Saudi economy is the biggest in the region, but that's because, they've got resources, right? And also with some of the changes they're making to the rules, they're trying to say if you're doing business with a government agency, you can no longer be one of these companies that allow your staff to stay living in Oman or the UAE and then you trip into Saudi. You need a physical presence. So it's true their economy might well do well or not well, I'm not sure. But where I don't think they're going to do as well as the UAE, I just don't see, at least in the next 20 years, why the majority of people would say, why not live in Riyadh compared to, Dubai? I think Dubai and the UAE in general is a much easier place to live. I think it's going to continue like that versus Saudi for a very long time. And look at somewhere like Oman. Oman's a good place to live, and it's much more liberal still than Saudi. But Oman hasn't taken the UAE's cake despite, being much cheaper. So I don't see it, but you never know because places change and. I'm sure they want some of the cake as well, right? Of these nomads and expats coming into the Middle East, I'm sure they see an opportunity to take some of that money as well. Yeah,
and I know that they're doing a lot to on marketing and stuff like that to get people to come. Oman isn't on my list. I might put that on my list of countries to just visit. That's interesting. Okay, Africa, hotspots in Africa.
Africa's an interesting one because I'm very optimistic in general about the long term of the African economy or some of the countries in the African subcontinent. But that doesn't necessarily mean the location-independent people are all going to want to live there because location-independent people care about lifestyle a lot. So, for example, we were talking before, obviously, the cameras were rolling about how South Africa has a very good lifestyle. But, the South African economy, the last 10 years hasn't done that well. There's been numerous issues with electricity recently, corruption, and so on and so forth. But the bottom line is within Africa, it's one of the best lifestyles. And I think a lot of the people watching this podcast, it's more likely they're going to be lifestyle expats who've got an income from overseas. And in which case, some of the better areas of South Africa might still suit. But I would say also Mauritius is an area that is trying to come up. So Mauritius is very much like an offshore financial hub for Africa, similar to, say, a Dubai or a Singapore. And it's at a very low level now compared to the aforementioned countries. But I think somewhere like Mauritius, where it's relatively safe, it's sun, sea, and relaxation. Who knows? Somewhere like that could come up. But I still think in the next 15 to 20 years, most of the people who go to Africa are going to be working expats.
Mm-hmm.
One place I would mention, though, is East Africa does have, believe it or not, quite a few lifestyle expats. Kenya,
Yes.
Uganda. But I think, and I suspect, I can't prove this, but I suspect that a lot of those people they maybe had a job in the region before. They traveled around. You know what we were saying about Oman before? And then they got to love that region. So, for example, let's say they were working, I don't know, in oil and gas in Africa. Mm. They traveled around. They thought, this is a great place in Kenya and Uganda. Then they semi-retired. They bought a lodge or something like that. I don't think that many people are going to go directly from the UK directly to like a Kenya or Uganda.
Yeah.
But there's a lot of people who have maybe got a job in the nearby countries. They visited and they thought, this is great. This is a great lifestyle. So I'm going to spend time there. And I've spent time there as well. Haven't lived there, but I've been there twice in the last 3 or 4 months. Sorry, not 3 or 4 months, actually, in the last year. Mm-hmm. And it's fantastic. It's a fantastic part of the world. Would I want to be based there? Probably not. But if I was single and younger, maybe I would spend more time there. It's a really great part of the world.
Yeah, I think there's a UN, there might be some sort of UN something in Kenya. So I know that there are a lot of expats that are there as well. But also, like you said, I think they moved for work and then ended up just staying. I would say also from my perspective, Ghana is pretty popular as well. But I think those are usually more from like British people who are already West African or African and thinking where to go. In my experience, people tend to go to Ghana, especially a lot of West Africans. And I'd say South Africa is a really good one. If you have been following my channel for a while, you know that I've spent a lot of time there. I have a property there. I think the lifestyle there is really good. And I do know that with money, you can circumvent a lot of the main issues. So it is a really good place. And I know Kenya, a lot of people are investing as well in Kenya as well, in land and stuff like that.
We've done deals in Africa, including East Africa. We think there's great opportunity, but as always, opportunity, it's a coin. It's like a double-edged sword. Mm-hmm. You've got the opportunity, but then you've got the threat. And I think that's very much where some of these economies are. You've got a massive opportunity, but then you've got to understand if you invest there or you do certain kinds of businesses there, there's also more risk compared to, say, investing in the US, for example.
Yeah. I think Europe, you mentioned Portugal already. You mentioned Monaco. I don't know if you mentioned Spain. Is that one?
Spain, yeah. Again, it gets a lot of lifestyle expats, I would say, and they do have various schemes there. I think there are also some special schemes on the Canary Islands near Tenerife. And Tenerife has a beautiful climate, very similar to East Africa, because it's an island, let's face it, which is inside the African continent. Spain's one, Malta and Cyprus as well. But I think the big difference in Europe is because the headline tax rates are very high, you've got a lot of places that have done special tax schemes. Greece is now one. So it's more people go there when they get a tax exemption or they're like retired. So let's say you're a retiree or you've sold your business or whatever, and you've got passive overseas income. You can live in Europe for very little money in some of these countries and not pay very much tax. So I think it all links back to the schemes. The countries that have got good schemes like Portugal, Spain, also Greece and so on, they attract a lot more people in than those places like the UK, for example. Historically, people came in on the non-dom scheme. But of course, now that's been pretty much almost closed down. So I think it always depends on which new schemes are opening, which attracts more people as well. But for lifestyle expats, of course, I mean, Southern Europe is brilliant, right, for a lot of people.
Like I think we've put out a lot of different options for different people. So that's really
more
good.
More than enough, probably too many.
What about places? Do you have any opinion on places to invest in property abroad or make investments in general? So that's one of the things I really like to talk about on my channel, property investing. Any places that you would recommend or like that you see an opportunity?
I think it depends how much risk you want to take. So what I was saying before, that I'm quite optimistic about some of the African countries, but there's a higher risk. And I think a lot of those places with that kind of dynamic have that opportunity, but they also have the threat as well. One thing I would say, though, is if people go online and they go to somewhere like Numbeo, I think it is, which compares property prices by city, and they look at certain things like, okay, what's the rental yield here? What's the they look at certain dynamics. I would say in general, those places that have very low rental yields, so places like Singapore, London, and so on and so forth, Shanghai, the opportunity is usually much lower compared to those places with, say, decent rental yields, and also where the average income to property price is more reasonable.
Right.
So, for example, if you compare, say, Dubai to London, Dubai has, I think, rental yields which are close to double of London, and the prices, believe it or not, are more reasonable in general per square feet. I know it's changed a little bit. Now, don't get me wrong, Dubai, there's reasons why Dubai has that situation, because you've got a lot of building. There's always new supply. There's always cranes everywhere. But I would say look at some of the fundamentals. I would say look at some of the emerging markets as well, because in a lot of developed markets now, the same thing's happening in Canada as the UK. It's becoming stricter when it comes to taxes and so on. What I have heard, though, is the US, believe it or not, can actually be a pretty good market for buying property, especially if you're actually going to live there, because it can be tax efficient. And also some parts of the US have great rental yields. But I would look at some of the emerging markets, but I would see property in one or two ways. I would either just see it as a way to diversify. In other words, if you want just a safe investment, you want to buy somewhere in, I don't know, London or New York, in that case, don't expect huge returns, but expect that maybe the price will go up approximately with inflation. The big returns have happened historically, but you might make a bit of money from it. But if you're looking for much higher returns, I would be more adventurous, but then accept the risk that comes with that. And in terms of regions, maybe some parts of Africa, like East Africa, you could look at those. In terms of off the beaten track places, believe it or not, I think the southern part of South America, places like Uruguay could be interesting, because Uruguay, for example, is quite a big country. People forget this, but the population is very small. And it's a very developed and efficient place by the local standards. And I think it is trying to do what, say, the UAE has done, or Singapore is trying to attract in like more and more people. So they've got like space there to do that. So I would have a look at all the fundamentals. In terms of like more general investments, that's always a bit different, because that depends if you're talking about the stock market or you're talking about private businesses. For my clients, my focus is more on the stock market or the bond market, or sometimes private businesses as opposed to real estate. But that's what I would look for when it comes to real estate. Decide, are you just going for a diversification play, safe play, or are you going to go for something more adventurous? Because if you want to go for something more adventurous, for example, in Asia, Cambodia has very cheap prices versus almost anywhere in the region, including places with similar incomes. So even Phnom Penh, the capital city, has very reasonable prices. But there's a reason for that, right? Because you're taking more risk. So you always have to consider how much risk you want to take versus the reward, basically.
Okay, that makes sense. One of the issues that, it's an issue. One of the issues that expats face sometimes when they leave their home countries and go and work elsewhere is the fact that they don't have certain financial, I don't know if you'd call it, not incentives, but like things like a pension they don't have, right? Because it's not necessarily the responsibility of the government in the country that they are moving to take care of them in the future. What are some things as an expat what are some things that you can do as an expat to make up for the fact that you might not have a pension or like these other financial incentives that you would get in your home country?
I think the biggest one is to automate something. So going back to your home country, if you think about it, what's the typical person's cash flow? What does it look like? They get paid from their job, because most people are still salaried workers.
Yeah.
One day later, mortgage payment comes out, the bills come out, maybe auto-enrollment or 401ks in the US or superannuation in Australia, that comes out automatically from their salary. And there's many negatives about that, because people's income, disposable income at least, is much lower. But the positive is, if you think about it, if you're paying towards a mortgage, you're paying towards your old age pension, like government pension automatically, you're paying against your private pension, or paying towards it automatically, should I say. That means that even if you're poor for your whole life, by the time you reach retirement age, you should be okay. Now, that doesn't exactly sound like such a great advert for the UK or some of the Western countries, but it is true that if you look at the UK population, for example, pensioner poverty is much lower than working age poverty. And there's many reasons for that, but I suspect one reason is the system makes it easy to automatically put money away. In comparison, imagine the UK said to people, well, okay, there's now no income tax, no national insurance. You're going to have more money in your pocket, but you're going to have to pay for your own pension and so on. People are going to have to be more disciplined, right? So what I would say is automate something. So even if it's something small, if you're paid after, for example, the 10th of every month, between the 10th and the 15th, maybe one day after you're paid, contribute to an offshore, portable expat friendly investment, for example. Just make sure that you're putting something aside for the future, and then your mind will just write that money off. So for example, if someone's got a disposable income of $5,000 and they put, say, $1,000 towards some kind of plan, de facto pension essentially, people will just adjust and think, okay, now I've got $4,000 a month to live on. So I would say automating your habits is key, because the path of least resistance is key, right? People do what's convenient. Just make it convenient for yourself. Don't make it hard to invest. Don't force yourself like every single month to need to log into online banking and send the money. Try to just automate it, and then it'll just happen automatically.
Yeah. So what are some future plans that you have?
Well, the main ones are next year, we're going to offer more investment options to our clients. That might include things like art and wine and different private equity investments. I believe, hopefully, once this goes out to your followers, we'll have a special offer, hopefully, for your followers as well.
So check the description box.
And in addition to that, we are investing into more businesses around the world. So, for example, we should have some deals going through for different financial advisory companies around the world. So we are investing into our businesses as well in the financial advisory space. So that's a big plan for the future for us. So, watch this space. So maybe if you're an advisor out there or an advisory company, if you want to sell out, maybe give me a bell.
So we are now going to be moving on to the Wealth Woe segment of the podcast, which is where one of the listeners sends in a dilemma, and they would just love to hear your advice on, what they should do. And if you want to send in one of your Wealth Woes, there is a link in the description box for you to send it in anonymously. Okay, so I'm going to read. This person says, I am refinancing my investment property and will get £56,000. What is the best option to scale and multiply my money?
Well, first of all, obviously, the boring stuff first. It's not formal financial advice, what I'm about to say, but I would say that my own belief about property, assuming this is in probably the UK, I think, is that actually a lot of people don't know there's been a lot of changes now to UK property. So it's much less tax efficient than it was before. So that kind of DIY landlord has become less popular than the past. Some people have said buy to let is dead. I don't think it's completely dead, but what is true is the government's making it harder in the UK to actually have multiple properties as a DIY landlord because of all the kind of changes to tax and so on. So I would actually say what makes more sense probably is to take that money and diversify into different areas. So you could look at different areas depending on your attitude to risk. That could be stocks, it could be bonds, it could even be international real estate. But I would say diversify away from real estate. I don't think the returns that we saw in, say, the 80s, 90s, 2000s will be replicated in the UK. Nobody knows for sure. But people even forget that since the global financial crisis of 2007, 2008, UK property prices, at least nationwide, and bear in mind, that was like 20 years ago now, they haven't actually recovered adjusted for inflation apart from in London. So actually, if you go back to like 2007, 2008, just before the crisis, in many small towns and cities in the UK, property prices were actually higher than they are now, at least adjusted for inflation. It's only London and one or two markets that have actually seen real growth. So nationwide, for example, the Nationwide Building Society, they have a chart which shows UK house prices in real inflation adjusted terms. And you can see that whilst it's recovered from, say, 2009, 2010, after the worst of the crisis, it's not as high as it was, say, in 2008. So I think UK house prices in the next, say, 15, 20 years are likely to be stagnant, adjusted for inflation. And now if inflation is 3% per year, in another 10 years, maybe houses will be 40% more expensive because that's just the natural inflation that will happen. I don't expect big increases in UK house prices. But having said that, maybe in 10 years, people will be looking at this and watching this and laughing at me and saying I was an idiot. But that's just what I see from the data.
Okay, so from the data, it's London. Do you know what the other two cities are that like actually saw real growth?
Well, there's been a few cities that have seen growth. It's true that certain cities, I think Birmingham, Manchester, certain parts of them have seen good growth. And cities in general have come up a bit in the UK. Every time I go back to the UK, because I've been living overseas for a long time now. But when I go back, I always notice that Birmingham, Manchester, they've really, come alive. But then when you go to just an average town, average place in the UK, you actually find that, the prices are very stagnant. I mean, one of my friends, they sold their property, I think it was about 5 years ago. and they bought it 12 years ago. And I think they got about £2,000 more than they paid for it. And obviously there's been a lot of inflation, since then. So in the UK, if you actually look at the data, of course, it's always going to be the case that if there's some inflation in wages, inflation in general prices, you'd expect properties to go up, right? But adjusted for that, we actually haven't seen big price rises in the UK for quite some time. The last time I think was 2000 until 2007, or probably the early 90s until the financial crisis. Those kind of 15, 16 years were great for property prices, but I just don't think the conditions are there for the UK to replicate that anytime soon. That's just a personal opinion. Obviously, I could be proven wrong. But there's nothing that kind of tells us that like the UK is going to have some kind of property boom. So I would definitely look to diversify.
Okay, that's really good advice. What did you say, a DIY landlord? I've actually never heard of that before. What's that?
Well, it's an impression or an expression, should I say, that I've just come out with. So basically, what I mean by that, you have like a DIY investor who doesn't use a financial advisor and they go on Hargreaves Lansdowne or wherever it is. By a DIY landlord, I more mean that you have these professional landlords, right, who own hundreds or thousands of homes. Maybe they're a business that's really focused on property. They are professional property investors. By a DIY landlord, I more mean someone who's a teacher, a doctor, a dentist, the kind of person who can make a lot of money in the 90s and 2000s by just renting out properties, buy to let. The rent covers the mortgage. They're left with loads of properties. That has become incredibly difficult now because of all the changes the UK government have made, including to taxes. So, for example, now you can't actually deduct your interest from mortgages as a buy-to-let landlord. So that change alone made a huge difference to the maths.
Is that when they have it under a company or when it's like in their personal name?
Well, across the board, it has got more difficult to operate that. What is true, and there's a debate about this, and again, I'm not a tax advisor, but the point is, if you are wealthy enough where you can own tens of properties, it can sometimes be done in a more efficient way. Because remember, though, even if you pay less tax for a company structure, of course, it costs money to maintain that company, accountants and setting it up. So it doesn't really work if somebody's got 3 or 5 properties. But let's say someone's got enough money to have tens of properties, they might be able to do it. But still, I've noticed a lot of expats who have moved overseas and people that I just know who have got even decent sized portfolios. Many are selling out now. There's a big amount of DIY kind of non-professional real estate investors who are exiting the market and have been for a number of years now.
Yeah, I think I definitely get that sentiment, especially with the UK and all the changes that are happening. They definitely are making it more difficult, especially if you're, it's just so many things. The properties that you were saying that probably weren't seeing that, the real capital appreciation. Do you think they're seeing good yields then? Or do you think like the yields aren't worth it, the capital appreciation isn't worth it?
It's a good point, actually, because what is true in certain parts of the country, you can get decent yields. So, for example, Stoke-on-Trent, Wolverhampton, those kind of areas that are not necessarily on most people's radar internationally, you can get very good yields. But then the property prices are quite stagnant, especially adjusted for inflation. But then you have to consider time because, return on investment is one thing, but what about return on investment adjusted for time? You might also, to get decent returns, have to put in some time, reinvest money into the property and so on and so forth. So I do think, though, compared to some city centre investments, they can work for some people because also the starting price is quite low. But I think the days of easy kind of money from real estate in the UK are largely over. So I think there are better investments for most people out there, especially adjusted for time, risks, hassles, all the things that people don't actually sometimes factor in, right? Because even if it works out for you, but you're spending a lot of time on it, you have to consider, well, what could you be doing with that time elsewhere? Let's say you're a private entrepreneur and you've got a growing business, but if you're spending 10, 20, 30 hours a year on these properties, what could you be using that time for in your business? So I think people have to focus on, like, holistically, what is the return adjusted for all those things, not just pure ROI.
Okay, so your advice to her would be maybe try something outside of the traditional UK buy-to-let.
I would, obviously not knowing about her personal situation. I mean, if she's a professional real estate investor, for example, and it's her day job, then there can always be exceptions. But yes, I would say the vast majority of people, I do not think they're going to make significantly more money in buy-to-let in the next 10 to 20 years versus even cash in the bank.
Okay. What about strategy-wise? So what if she goes for like a more I guess that doesn't solve the capital appreciation issue, but it might solve that. Like, let's say HMOs, for example.
Yeah.
Do you think maybe that?
Possibly. I mean, it's true that some people are going towards more HMOs and also things like build to rent and all this kind of thing rather than direct buy to let. So it's true there are certain areas that are, getting bigger. There's also real estate investment trust, REITs, that you could look at as well. So there are areas, but personally, I think, especially if she's already got the bulk of her net worth in property, that's a good argument in of itself, alongside what we spoke about, to actually diversify further.
Agreed. Yeah. That's great advice. It's amazing. Okay, let's move on to the quick fire money questions. So the first question is, what is the best investment you've ever made?
Into my business. Investing in myself and in my business has been easily the best investment I've ever made. But again, coming back to what we said before, then the risks are always higher, right? So at least in the early stages, because most businesses do fail. But if you succeed, then of course, you're going to make a lot more money than private investments, where it's more about, avoiding concentration and being diversified. So best investment is in my private business, but I don't put all my eggs in that basket because you never know what could happen.
Okay, I like that. I think that's actually quite a common answer that we get. What is the biggest money mistake you've ever made?
Even though I just said that my private business has been the best investment, within that, though, there have been plenty of investments that have gone to zero. So, for example, using marketing agencies numerous times, well, not numerous times, but 2 or 3 times, I've severely regretted dealing with them. And so numerous of those private investments have gone to zero, but that comes with the territory. So even though overall I've made a lot of money from my business, there have been numerous investments that have gone to zero. But probably the very worst investments are when you don't cut it quickly. So when you've invested into a person, for example, and they let you down, and then you think, well, give them more support, and it kind of carries on for months and months and months. Those are usually the worst investments. In terms of like private investments I've made a few that have lost me 20, 30%, but nothing kind of severe. And I always knew going in how much risk I was willing to take as well.
That's good. Okay. And then lastly, what is some advice that you would give to someone who is trying to build wealth or is trying to build wealth globally? Maybe some advice to expats as well.
Yeah, I would say, taking the last part of the question first, we talked about automation earlier. I think for expats, it's very common to wake up at 50, 52, 55 and think, oh my God, I've earned a decent amount of money. And now am I going to be able to retire? Or, that especially happens because ageism is a big thing in the expat market compared to back home, right? Many people who are in oil and gas and different industries, it is still socially acceptable for them. Maybe they won't say it directly, but basically to say, well, we're not going to give you projects anymore because you're 60. So I would say start early, automate it. But I think the biggest advice I would also give is really consider concentration versus diversification, how much risk you're willing to take. Because what I have seen is I've seen some people who make a hell of a lot of money taking concentrated bets. In other words, they bought NVIDIA, they bought a coin, they invested in their own business. But you've always got to ask that what if question. Like for me, for example, I've made really good money in my private business. But I always say, what happens if I had a heart attack tomorrow? What's going to happen to my family? How do you then protect them? Is it through insurance? Is it through private investments? But there's a lot of people out there who do look at things through rose-tinted glasses, and they don't ask those what if questions. So consider, okay, it's not all about making the most possible money. That's through concentration. If you've already won the game, why keep playing it? That's what I would say. Why not, at least with some of your portfolio, play it safe, have a diversified portfolio, maybe look at wealth protection, trusts, insurance, and so on. I think that's important because many people struggle with this spectrum, you could say, between greed and fear, right? And they go from extremes. Like they might say, okay, COVID happens, then they become fearful. Then a few months later, they become greedy. Maybe get some kind of middle ground where, as Buffett said, I think once, be greedy when I was a fearful and be fearful when I was a greedy. I think that's the biggest thing people struggle with. How much risk to take, how greedy to be compared to how cautious to be. And you've got to find some kind of balance. And remember, that might change as you get older. For me, at my age, I should be more cautious than 10 years ago, but nowhere near as cautious as maybe in another 15 years. So you've got to find that balance, I think, along the way, because you can always say, okay, I've made loads of money being concentrated, but you've always got to ask, well, what happens if something goes wrong? Because you've got to remember, if you 4x an investment, then 4x, then 4x, but you then make one investment that goes down by 99%, you've lost all your money. So I think that happened a few years ago with NFTs. Some people went from Bitcoin and tech stocks to NFTs, and most of them have gone to zero. So be careful with how concentrated your portfolio is. That's a key thing, and automate it.
Wow, that is really, really, really good advice. If people want to hear more advice from you, where can they find you?
They can go on my website, adamfayed.com. You can always find me on LinkedIn as well and various social media channels. I'll be happy if you added me as well and told me you came from this podcast.
Yes.
And look forward to carrying on the conversation.
Thank you. Thank you so much, Adam.